welcome to the show today. Um, Today's show is called The Beginning of the Block Market. But before we get into that, let's thank all of our sponsors. Quantum Expeditions. Obviously, if you're not aware, Quantum Expeditions is run by our buddy Doug Hardwick, but was started by one of my buddies and former boss. I guess he still technically is my boss, Matty Greenspan, who also started Quantum Economics. But they do mining down in Texas, and they started to realize, because I've been saying this for a couple years now, that almost all Bitcoin miners will become energy producers or figure out how to secure wasted energy and get cheaper Bitcoin production. And that's what they're doing with their solutions down there. They're using flared methane gas and securing a very, very good kilowatt rate. And what does that do? That gives you cheaper Bitcoin production. And when you're getting cheaper Bitcoin production, that means you're generating more Bitcoin for a lot less overhead. And that's a big deal. If you're interested, go check them out. Highly recommend it. Stay away from cloud mining. We'll get into that in a second because I just want to bring that up. Also want to thank our folks at Shieldfolio. That should be coming up in a second. And again, what do? They protect your seed phrases. Look into it. It's a good product. And also everyone at Deorganized Media and the team at Bitcoin Live and all the people that have shows. Thank you so much. But yeah, getting right back to what I was saying about cloud mining, steer clear of cloud mining. I don't care what anybody tells you. I invested a lot of money back in 2018. And when Bitcoin price hits a certain amount, and almost all cloud mining services have this written into their contracts to protect them. Their lawyers are very smart, right? And crypto lawyers have been around for a long time now, so they know this little trick. What happens if Bitcoin drops below a certain price point? They can't pay you. So what do? They absorb your share of the Bitcoin that you're supposed to get in that mining operation. So one of the biggest scams I've been seeing going around, and you can tell me it's not a scam, but again, XRP is a proof of stake type of crypto. There is no mining. So I'm seeing all of these XRP mining contracts, cloud mining contracts going around because it pumped a lot, over the last couple, 3 or 4 weeks. And I'm just seeing it more and more and more. There's no such thing as XRP mining, people. Like, this is how new you are to this space. If you bought one of these things, it's probably like 80 percentile a scam. There's no more. I'm seeing Ethereum mining contracts. That used to be a thing, but Ethereum is now proof of stake. So there's no more. There's very few. There's like one chain that's doing like Ethereum proof of work. And then there's Ethereum Classic. But again, their scams are running rampant right now. And that's because we're heading into the beginning of the block market, right? Where we're about to be back in the wild, wild west, which we kind of have been with this new administration and the passage of the Genius Act. What does that mean? Well, it means many things, right? That crypto is becoming money, which I've been saying. I tell people, I have a degree in political science. I studied a lot of law, and as I've looked at this space over the last almost decade of learning many, many things, from cybersecurity to Python data science to JavaScript to looking at Ethereum smart contract audits, et cetera, et cetera, et cetera, is that this is money, right? This is all types of money. And this is the beginning of the block market, right? Where not only do we have cryptographic money, but we have all types of cryptographic assets, right? And this has been going on since the formation of NFTs. And also, obviously, if you've been following the space very closely, there's, countries like France and the EU have tested bonds with Ethereum. Australia sold gold on Ethereum's blockchain for a little while. Tether has their, I think it's AUDT. Paxos has their gold, right? So we have been tokenizing RWAs for some time, and it's going to happen everything, right? So let's start. I think I had something very interesting pulled up on that, and let's get to the Genius Act and why that, like I said, why is that important? So the first thing of why that's important is this last line right here, as you can see on the screen. And we'll just read the whole thing. The Genius Act, guiding and establishing national innovation for U.S. Stablecoins Act, officially designated S1582, has been signed into law by President Trump. The act establishes the first federal framework for regulating payment stablecoins. It passed both the House and Senate with bipartisan support, with the House vote being 308 to 122, which is pretty good, pretty strong. Have to point that out. It wasn't like right down the middle. The bill clarifies that payment stablecoins are neither securities nor commodities. And that's huge, right? Like that's very huge. And this, I think, will also start to apply. We're already hearing this de minimis exemption for Bitcoin, and this should be the same thing for Bitcoin. Right, up to a certain point, and Litecoin, right? Anything proof of work, that's a commodity like cryptocurrency, you should get these de minimis exemptions, because if you're buying things, it's money and it should be exempt from that taxable event, right? And also, as somebody who studied, been to an actual law library, I tell people, not only should these not be taxable events, miners, right? Like, again, if these people are paying for their electricity or play in quantum expeditions, they're buying their methane, right? Their gas. There is a utility tax associated with most of these purchases, especially if you're buying it just from your local grid producer. You're paying a utility tax, right? So there's another tax that nobody ever talks about. All of this stuff is changing right before our eyes, right? This is why the Genius Act is amazing. Even though I'm not a huge fan of stablecoins, it just made stablecoins money. And the banks are fully aware of this fact. And let me pull up, I think I had another one, and we can go down the breakdown. So obviously, let's just go over the key provisions. Payment stablecoin definition defines payment stablecoins as digital assets used for payments or settlements that are redeemable for a fixed monetary value and are expected to maintain a stable value relative to a fixed benchmark. National currency deposits and securities are excluded from this definition. Let's see, eligible users permits only U.S. formed entities such as subsidiaries of insured depositor institutions, federally approved non-bank entities, or state qualified issuers to issue payment stablecoins in the U.S. Foreign issuers can operate in the U.S. if their regulatory framework is deemed comparable and they register with the OCC. And what does this mean? This is basically saying that they're not going to allow the banks to make stable coins. They're going to have to be these, looks like, third-party subsidiaries. Circle, for an example, Tether, for example. I think they should have written in there something along the lines, a decentralized operator, right? That, we can't stop it, right? This is why Bitcoin is better than stable coins, and even Litecoin is better than stable coins, even Dogecoin is better than stable coins. Because a lot of these stable coins, the things they don't tell you, right, from the Paxos one to Tether running on certain networks, they can just stop it, right? They can stop that transaction right in the middle of it. And in some cases, with a few of these different stable coins, they can retrieve the money back. Pretty sure Gemini's can do that. And there's a few other, if I'm not mistaken, Binance, BUSD, which I think they've since stopped using. They used to have that capability. So these types of things are good if there is some type of theft or fraud, but they're not that great, if you're trying to do a transaction. And, like we've seen from time and time again in social media, especially in Canada, a couple times in the US, many times in Australia, where an Australian citizen goes to their bank, right, asks for X amount of money in cash, and they're like, no. And you're like, what? These are the problems that we're starting to face. And this is why, even though this is great legislation and it's giving us some, guide rails, and it's giving us some actual clear guidelines, I'm still a fan of the actual crypto assets, right? Like I posted up, it was a long time ago, a tweet, and we'll get back to this in a second because this is a funny story. I want to say it was like 2021 or 2022. It was like 3 or 4 years ago. And I made my own little meme, and it was a picture of the Boston Dynamics dog and a picture of a Roomba, and I like put them together, and I circled the Roomba, and I wrote USDT, right? And I circled the Boston Dynamics dog. It was like Bitcoin. I was like, do you get it? I'm like, they're both robots. One can do a whole bunch of really cool stuff, and the other one can, if it makes a, and this is a funny story, but I heard this just like a week or two ago. Guy got his first Roomba, and the dog got diarrhea in the night. And guess what happened? Oh, yeah. The Roomba pushed the poo all around the whole house. Yeah, that would have been fun to wake up to. This is called automation breakdown theory, which I've talked about many times, right? This is one of the reasons I tell people, AI isn't going to steal everyone's job, right? It's going to lead to more jobs in certain sectors, and it's going to lead to less jobs in other sectors, right? But another example why AI isn't going to steal everyone's job, Google this one. This one's hilarious. So I just read this the other day. This AI agent was working for this software company, and it erased the whole code base. Oops. And then it admitted, it was like, oh, I think I made a mistake. Yeah, bro, you erased everyone's ish. And wow, that stinks. But yeah, pretty hilarious if you ask me. Let's get back to this reserve and transparency. So they require them to have a one-to-one backing of stablecoins with high quality liquid assets like dollars, deposits, insured institutions, short-term U.S. Treasuries. So that's probably like not the 10-year bonds. It's like those the very short bonds. It's probably even the loans that banks give each other, right? Like those really short-term loans. Let's see, consumer protection prohibits misleading marketing claims about federal backing or insurance. Payment stablecoin holders have priority claims over other creditors in case of issuer insolvency. So they're basically saying that the stablecoin holders have priority over creditors. If something goes down, right? If whatever that platform, if it's a DeFi platform or something, like, well, we lost it all. Well, the people that own the stable coins have rights over the creditors that might have started that DeFi platform. Regulatory oversight establishes a dual state federal regulatory framework with federal oversight for issuers for over 10 billion in outstanding stablecoins and state oversight for smaller issuers in certified states. The OCC is primary federal regulator for federal qualified issuers. It sounds like the OCC is, again, in charge of all of this stuff, which is good news. In the last administration, or I should say 2 administrations ago, the OCC was very pro crypto. And those years, I think it was like Brian Brooks, everyone was getting very excited. And now we're starting to see everything that the OCC back then was excited about is now starting to come to actual fruition, which is why this is the beginning of the block market, right? Let's see, AML sanctions compliance. Issuers must comply with BSA and establish effective anti-money laundering and sanctions program. Of course, like I said, most of these stable coins will be trackable. I don't know about traceable. And let's go over that because there's a lot of people that understand the difference between trackable and traceable. And this is a very huge difference, right? When people bring up Bitcoin's traceable, no, it's trackable. There's a huge difference. Oh, wait, did I say that backwards? It's traceable, not trackable. Thank you. I had to re-say that. So Bitcoin is traceable, not trackable. What's the difference? So if authorities or nefarious parties have your public address, right, they can go to the Block Explorer and they can see, right, how much BTC is in that wallet or whatever Block Explorer it is, right, if it is a public address. Now that makes it traceable but not trackable. What makes something trackable is you have to have actual metadata that kicks out GPS coordinates, right? And says it's at this latitude, this longitude, right? And it's there. And that usually requires a whole bunch of other technologies working in tandem to actually be trackable, right? Your phone is trackable. Your computer is trackable because usually if it's IP address, and you can, in some cases, through tracing that wallet address, track down their location, but it's not giving you actual coordinates when you put that address into the Block Explorer, right? That's the difference between the two. It's a very fine line, tracing back the address can lead to an IP address that could give up a more trackable location of that person, but it's not. Like I said, if you take just that public address and throw it into a blockchain explorer, whatever chain it is, it's not going to tell you, hey, this person lives at 123 ABC Street, right? It's not how crypto works. Anyway, I got off on a little tangent. This is the beginning of the block market, right? Let's get into some stuff I had pulled up on my X feed for more fun stuff. Okay. Here's and perfect segue. Here's Porter talking about the Clarity Act and why the Clarity Act is important.
The other thing around market structure legislation, though, that we have to really be careful is that we got to do it the right way. We can't just have legislation that we cram through the system and we go, well, good enough. At least we got something done. I understand the impetus for wanting to do something like that, but I do believe that it's critically important that we're cautious around how it is crafted because it'll have long-term ramifications for how we innovate into the future, for how this space grows, for making sure that we don't run into another SBF FTX situation. The structure of that legislation is going to be critical, the way it develops the rules. But once it's done, and even I think if it's done in a good way or a bad way, in the short term, it will have massive the price of Bitcoin, adoption of Bitcoin, digital assets writ large. It'll have a very positive impact on the sector. I often compare it to when we passed the 1996 Telecommunications Act which ultimately re-regulated the entire telecommunications sector, allowing for broadband, the other types of technologies that were coming into the space. And I wouldn't say they got it perfect. I don't think any bill is perfect. But after that bill passed into law, you saw the adoption of broadband, Wi-Fi, you name it, cell phones explode exponentially. And there's like all these charts where it's like Telecommunications Act passes in 1996 and like charts all start to bend upward. There's a reason why a lot of lawmakers have this term that they say, which is like, we need to have durable rules of the road so people know how to operate. It's like building a highway. You're building this freeway where people would go super fast on, and you've got these guardrails on the side. Now, certainly the problem with that type of policy is when you create it is if you make the guardrails too tight, you've cut off lanes of traffic that you didn't necessarily need to cut off. But at least you made that like one area of like super fast. Everybody can go super fast the right direction. So we got to get it right. We got to do it the right way. We can't be overly aggressive. We also can't be too soft and allow a lot of the shadows that a lot of the scammers and fraudsters have been able to operate within continue to exist, because we can create policies that are great for innovation in this country. We're one of the best countries in the world for creating these types of policies. It's why we're such a dominant force in the tech sector. But if we create them the right way, we can protect innovation. We can have that super highway for all folks to be able to go down and make America the best place in the world for Bitcoin and digital assets, and while simultaneously preventing things like SBF and FTX from happening again in the future. That's the goal. That's the target. But the target is small when you're doing policy. And if you do it the wrong way, you could have the absolute opposite effect because you weren't consciously thinking about the impacts of policy changes. I often akin policy changes in the political space to policy changes on Bitcoin. A lot of Bitcoiners will understand this and will appreciate this. Small changes to Bitcoin's code today can have long-term ramifications that we cannot predict because it is a technology that has never existed. And so the same thing is true when it comes to government policy about Bitcoin. The types of policies that we put in place that are going to last for 10, 20 years, just like how they last in Bitcoin a long time. Like, it's so funny to me how similar government policy crafting at the federal level is to Bitcoin. Like, it takes a lot of work to get to consensus and to get everybody to agree, like, this is what we're going to do. It's actually even harder with Bitcoin. But the reason why it's important that it's hard is because we need to make sure that it's difficult to make changes. We want to make sure that everybody agrees on that ultimate outcome. In Congress, the same thing is true with Bitcoin. We need to make sure we get to consensus, and we need to make sure that we have a bipartisan coalition behind this next wave of policy. And if we don't, if we create policies like market structure, which do not have bipartisan consensus, we could end up in a very bad place. The reason why I say that is because hyper-partisan policies that get passed, bills that are passed by one side and that have potential long-term massive implications for our country, oftentimes get attacked and are subject to potential repeals in the future. And that is really bad. You don't want to create a bunch of regulations for crypto and Bitcoin and go, hey, this is what we're going to do. And then 4 years later, another administration comes in, a new Congress comes in and goes, actually, we think that's shit and we're going to get rid of it. So it's critical that we get that bipartisan component. We need that long-term durable policy solutions that are actually smart, that push innovation to the future, and also get rid of all of the scammers and the fraudsters in the space. And I don't think there's anybody in Bitcoin who could disagree that it's important that we do all of these things. Now, if you're just super anti-government anarchist type, like, yeah, you're going to disagree with me. But like, if you have any inclination to being an American who wants to see us lead on this stuff, and you care about government policy to any extent, like, it's hard to disagree that, yeah, we should write smart policies that limit the amount of frauds and scams and help innovation to flourish. And that's why market structure is so important. We need to make sure and get it across the finish line. And thirdly, because if you want to do strategic Bitcoin reserve, both of those other two policies have to get done before that's ever even considered.
So, again, this is, we're on the precipice of a new era, right? Most of the people in the space are getting this, right? But there's a lot of people that have no clue what's going on because they just live their lives, and I get that. And they have their families, they have their job, they just get up and they do their routine, and I get that. But everything is about to change, right? Drastically change. Let's get into more of we talked about the Genius Act. Yeah, exactly. It is. Most of it is invisible and digital, but that's the thing that we have to talk about, right? Why, um, if we're going to be building these assets, right, these real world assets and attaching them to a chain, why it has to be a proof of work chain, right? It has to be Bitcoin, it has to be Litecoin, it has to be Ravencoin, right? Why does it have to be a L1? uh, Again, yes, Bitcoin would be great, but Bitcoin right now is problematic, right? We have to get it. I think it's BIP420, which is the OpCat implement to have more of a smart contract capabilities on Bitcoin. But let's get into why I've warned the SEC, FINRA, and I will say it again. Yes, Litecoin, Lite VM. We're going to get into that as well. But why I've been warning some of the regulatory agencies about not letting Coinbase do RWAs on Base, and why I don't think Robinhood should be doing them on their. It's called Robinhood Chain, but it's built on Arbitrum. And let's get into why that is. So oops, I forgot to share. I gotta share a new page. Give me one sec, and it is. There it is. Sorry, I got a whole bunch of tabs here. So what are the holes in optimistic rollups, right? So here's one: long withdrawal periods. The most significant limitations is the challenge period, typically around 7 days. During this time, users cannot withdraw funds from the rollup to the underlying L1 blockchain immediately. This is because the system needs this window for participants to detect and submit fraud proofs if any invalid transactions were included in the rollup block. While solutions like third-party liquidity providers can offer faster withdrawals for a fee, the fundamental delay remains. Reliance on fraud proofs. The security model of optimistic rollups relies on the assumption that at least one honest participant will observe the rollup. Okay. Identify fraudulent activity and submit a fraud proof during the challenge period. If this assumption fails, if there aren't enough active and incentivized participants, invalid transactions could potentially be finalized. Yeah, that's the one thing I've been talking about. Fake transactions, spoof transactions can be settled on L1. Now, could you imagine if we're building bonds on one of these, right? And we're doing securities, and literally some securities fraudster comes along and creates all of these fake bonds, and they settle onto the L1. Oh yeah, that would not be good. No, that would be real bad. You just diluted your bond market by X amount, and now you potentially damage your whole economy like that. Yes, this is why. Are you paying attention? Yeah, this is why. No to base, no to Robinhood chain, building equities and securities and properties on their L2. Sorry. Where should it be done? Oh, I'm glad you're asking these questions, because I'm sure that just rattled on up in your head. Let's go to Ravencoin. And why have I've only talked about a handful of times, and today we're going to get into it. Why Ravencoin? First off, it is a proof of work chain. This is very important because time and time and time and time and time again, as somebody again has been working in the testing and writing and knows a lot of stuff about this space. For 10 years, proof of stake does not work over long time frames, right? So it can work for short time frames. And don't get me wrong, do I think Ethereum is going to suck up a lot of money over the next couple of years? Yes, I do. But as soon as it breaks and it does exactly what I said, whether it's a bond market or it's a property market or a REIT or whatever it is, and it breaks the L2, or again breaks that country's economy, all this money will stop flowing in Ethereum and will flow into a proof of work chain that's built for this. And Ravencoin is one of those chains. And let's talk about it. So the really cool thing is that Ravencoin can do that's more amazing than all of these other L2s is that you don't need fancy smart contracts to connect an asset to chain, right? So Ravencoin allows users to easily create, manage custom tokens representing various assets like securities, collectibles, real estate, and more. Customizable tokens. The platform enables the creation of tokens with unique features and properties, including customized naming and divisibility. Decentralized nature. Built on a fork of the Bitcoin code, Ravencoin utilizes a proof of work consensus mechanism similar to Bitcoin, which contributes to its decentralized nature and security. It's ASIC resistant mining. Ravencoin's Kapow algorithm discourages specialized mining equipment, promoting more distributed and accessible mining. Asset transfer and messaging. Ravencoin includes built-in features for efficient transfer of these assets and direct communication between asset creators and token holders. Deflationary mechanism. Creating new assets on Ravencoin requires burning Raven tokens, contributing to a potentially deflationary effect on the RVN supply. So anytime you make an RWA on Raven, you have to burn some Raven. So the supply is always going to be going down, which is one of the things I tell people I used to be a big ETH fanboy, used to be a big Doge fanboy. But I've, after studying code and learning more about economics, right, it's like, no, Dogecoin supply, even though it is a proof of work, its supply keeps getting bigger and bigger and bigger, like the dollar. So all these people that think, yeah, could it hit $1? Sure. But once it hits $1, it will retrace back to the mean, and it probably might hit $2 one more time. And then that's it. It will never hit those numbers again, because at that point, your supply isn't 130 billion, it's 150, or it's 200 billion, or it's 300 billion at that point. I don't know, but the supply keeps growing and growing, and the price is going to keep going in the opposite direction of the supply's growth. These are just basic economics 101. Benefits of using Ravencoin for RWA tokenization. Increased liquidity. Tokenization allows for fractionalized ownership and easy trading of illiquid assets like real estate and art. So, these kind of things that were trying to be done on Ethereum, which technically can't be done, can be done on Ravencoin. Enhanced accessibility, opening up investment opportunities to a broader range of investors, including smaller investors. Transparency and security. Its immutable ledger provides a transparent and secure record of ownership and transactions, reducing fraud and counterparty risk. And immutable is key when we're talking about RWAs, whether it's Bitcoin or it's Litecoin. We want it to be, if it's written there, it's there, and it's not going anywhere. It's not a linked like to an IPFS file, right? Like perfect example, I was in my one Ethereum wallet looking at NFTs, and it wasn't pinging the links correctly. So it looked like all my NFTs were gone. Were they gone? No, but the link wasn't working correctly. So it took like 5 or 10 minutes, and then poof, they were all there. If it's L1, it's always on the chain, right? That's a huge difference. I don't know how to impress upon you this fact any harder. Lower cost and faster transactions, streamlining asset transfer by reducing reliance on intermediaries, leading to faster and more affordable transactions. Again, just like we were talking about, if you're trying to transfer an asset from an L2 to somebody and they don't know anything about L2s, oh my gosh, it can be a royal pain in the butt. This is a lot easier to use, right? Challenge of RWAs applicable to everyone. Obviously, regulatory uncertainty, blah, blah, blah. We're not going to get into that. But somebody else was pointing out, I think it was Nick, why is, where does Litecoin come into this mix? And I think I have that pulled up too. Give me a second. Let me just jump back to my X feed. Yeah, I got it. Here we go.
Layer 2 that is coming to market or has come to market, I'm not sure, you tell me. Is the Litecoin layer 2 something the community should be excited about? Is it going to blow up like the Ethereum layer 2s? Is it going to be more like the Bitcoin layer 2s? How should we think about it?
I think it's still like an experiment. There's quite a few different layer 2s being built on Litecoin, and it's not something that I personally am working on myself, right? So I think Litecoin needs to be at the core layer, base layer. It needs to be stable. It needs to work. No network downtime, nothing fancy, and because you don't want, if someone's trying to spend money, spend Litecoin, right? You don't want the network to be down. The network can't be down, right? You can't like prevent someone from spending their coins. Fees can't go crazy to like $5 a transaction. So it has to be low fees. The network has to work. That's an important thing with Litecoin, right? The base layer has to just work. But people can do fancy stuff on top of it. There's one called like LitVM that is building something on top of Litecoin. There's a Zcash, zero zk knowledge proof one on top of Litecoin. There's a Litecoin computer, similar to Bitcoin computer. That is another EVM compatible layer.
I heard about
there's a lot of
EVM. I didn't even realize there was all of these different ones. I heard about LitVM.
yeah. I mean, there's a lot of different ones doing like kind of different things, and we'll see which ones become successful. But they're all kind of experimenting on top of Litecoin, just like they've been experimenting on top of Ethereum and Bitcoin. As the Litecoin Foundation supports like all of them, right? We want to see people try different things, and we want them to all succeed. I mean, there's a lot of other stuff built on top of Litecoin, right? There's like Litecoin ordinals. There's a lot of stuff like that, NFTs and stuff. All cool stuff being kind of experimented on Litecoin, and yeah, I'd love seeing all that stuff happening.
Litecoin.
Oh, sorry. Yeah, I literally thought I was pausing it, and then I just replayed it. So what is LitVM? So LitVM is trying to build an L2 solution, and let's be clear, this would be a different L2 solution than all the other L2s out there, because Litecoin's programmability would, again, if this works, because it is still an if, and I'm pretty sure it will, it would make it the interoperable chain of all chains, right? Because they want to use ZK rollups, which we just went over. Like, you know what? I didn't even have that pulled up. Let's just pull up like why ZK rollups are superior, right? We can just do a little Google search. Okay, like again, so right out the gate, ZK rollups are superior to other scaling solutions. I didn't even diss optimistic, but they're like optimistic rollups primarily due to their enhanced security and shorter withdrawal periods. They achieve this by using zero knowledge proofs to verify the validity of transactions off chains, eliminating the need for a challenge period and significantly reducing the time it takes for transactions to be finalized. So the main thing that people have to realize about optimistic rollups is in all of these ecosystems where we're trying to create more more or less friction in the transactions, optimistic rollups is adding friction, right, to slow it down, because we don't want people faking transactions. We don't want spoof transactions settling in the batch, right? And building something like this on Litecoin would be phenomenal, right? First, it would be super fast. It would be very similar to the Lightning Network, and we could do RWAs. And we're going to need several chains to do this, right? I think Bitcoin, Litecoin, and Ravencoin are the top 3 ones. When we're talking about putting real world assets on chain, we want them to be on proof of works, right? Because if they're not on proof of works, they're in these virtual systems that break all the time, right? I've warned about DPoS. Thank you for the slide. I've warned about DPoS many times, right? Delegated proof of stake. There's usually 21 block producers, right? EOS, that was their model. And something happens, right? One of the block producers can't produce blocks anymore. And they're like, oh, we're going to switch to this guy, and he'll produce blocks for a while until he runs out of money. And then we'll switch to this guy again. XLM has happened. This has happened to XLM. This is XRP went down. Why you don't want centralized systems like Solana with real world assets? Oh yeah, I want to sell this property, but Solana's down today, right? Like, no. This is why decentralization is very vital. And again, I've said this many times. You've got 21 million Bitcoin and what is it, 84 million Litecoin. Both of their supplies equals like it's over 10 quadrillion divisible units, right? And then again, if we add in Ravencoin, there's 21 billion of them. Again, that's all you need to run most of all the money in the world. I'm just saying, you can go play with Ethereum all you want, but I have like literally, I want to say a half dozen old Ethereum wallets. If I open them right now, right? What do they say? 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0. So again, Litecoin's been around for a long time. Oh yeah, thank you for the little slide presentation in the background. But why is Litecoin not going anywhere? Because more and more people use it on a daily basis. Now, obviously, this is based on BitPay's server, but a lot of people use Litecoin's L1 to buy stuff, right? Whether they're buying other assets or they're buying something in the real world, they actually use it because it's quick, right? As soon as I transmit the transaction, even if it does take 2 to 5 minutes for it to confirm, you can see it's like, bloop, oh yeah, there it is. And it'll be there in a couple minutes. Oh, awesome, buy, right? And that's pretty much putting an L2 on top of it, and again having a Litecoin Lightning Network, which it can be done, is going to make it again the true omni chain of all omni chains. And again, it's just one of those things where when you don't realize what can happen and you don't have the actual physical, miners in the real world incentivizing that base layer, when that's taken out, right? I don't care if it's Dash or it's other master nodes, it's not going to work. I think there's other chains that still exist. Of course there's going to be. But the more and more I look at the whole space, proof of work keeps everything in check, right? If you don't have the miners, there will be scams, right? At the highest order, somebody's going to figure out how to fake the funk, and it will happen, right? We've already seen it on base when all the base meme tokens were dropping. All these people were trying to scam Coinbase out of, or not just Coinbase, but Coinbase and their customers out of tons of money by creating these bogus rug pull projects that, again, they're going to happen on any new network, whether it's an L1 or L2. If the fees are low, right? I always tell people the money's going to flow to security and low transaction fees, right? And who's got the best security and lowest transaction fees? Well, that's Bitcoin's got the best security. Who's got the second best security? Litecoin. Well, who's got the lowest transaction fees and almost the best security? That's Litecoin, right? It's bumping here. I have it right here. Litecoin's pushing what, 2.5 almost petahashes. That's a lot of power behind the network. Here, I'll pull it up right now. Yeah, it just went down. Okay, but it's riding at 2.4. And you can see back here, this is where large operations went offline, right? Like two huge farms, whether they're neighbors or it's the same farm turning off two big sections of the farm, but they went offline for, it looks like a hot minute, and then pew, all that power comes back online, and you can see it went right back 2.6 petahash. Look at it, Bitcoin's network. All these bears thinking, Bitcoin is going anywhere. Nope. Where's Bitcoin at? Oh, who said this was going to happen? I'm the only analyst, by the way, that said this was going to happen a year before it happened, and I nailed it. I have the receipts. Go look at my X account. But we're in the Zeta zone, right? Like you can see. Let's zoom out. Let's look at a 6 month. I mean, look at the setup. Oh, I mean, look at these peaks here. So, and then we have some retracement, but you can see the wave is compressing again right in here. And what's it about to do? Boop. It's going to hit like, what's this fib line? This has got to be like 1.25 or 1.35 is my guess. But that's where we're headed. New all-time high for the hash rate of Bitcoin. And Litecoin's hash rate has no chill either. So again, all the bears, I don't know what you're smoking. This is normal. Bitcoin down from 120K. It's down 5K. Oh my gosh. The real hodlers are, yeah, like whatever, bro. The newbies are like, oh my, oh, clutching pearls. But yeah, no, everything's fine. Everyone's tripping. You know who made the big boo-boo today? Mike Novogratz. Why is Galaxy Digital selling all this Bitcoin when all signs point to, here it was, when is this? June 30th? Yeah, and then this was just the other day. What was this? Yeah, this was just July 15th. So my prediction of it hitting a new all-time high by like the end of the month, beginning of August is right there. It hits 125 to 130, somewhere in there. Facts. Sorry, Mike. I'm pretty sure I posted that tweet up. I was like, yeah, you're way wrong on that, Mike. I don't know what you guys are doing, but Godspeed. Do you see Michael Saylor selling Bitcoin? No? Okay, well, neither should you, bro. Let's go back to my feed and see what else I got up here. Oh yeah, here's a normie who thinks he understands Bitcoin. Let's check out this guy. Oh, okay, because it's a Ponzi scheme. It's a tulip fever. Yeah, again. Okay, Maine Toro. Mr. Maine Toro. Yes, I'm calling you out, bro. Clearly you don't understand how bubbles or pyramid schemes work. But let me tell you, a bubble forms, right? Did you ever look at a bubble? Like you when you were a kid and you blew bubbles, or your parents blew bubbles, they get big, they float around, then they go pop and they disappear. Bitcoin has never disappeared. And it keeps hitting new all-time high after new all-time high after new all-time high after new all-time high. So that's not a bubble. That's called infinity, bro. So maybe you need to get a dictionary, go read the definition of a bubble, and then go read the definition of infinity, and then compare and contrast. And you'll see you're clearly wrong AF. Take care. Oh yeah, this is why I tell people, right? I said, until Chris Larson and who's the other guy? What's his name? Dump all their bags. I will not buy another bag of Ripple. And Larson just dropped almost $250 million of XRP in the last 10 days. Are you paying attention? Yes, this is why it's a securities violation, because the board of Ripple owns big whopping bags, right? That bag a couple of months ago was probably like $100 million, and now it's at $3. He was like, sell, 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 sell. That's on his own asset, yo. Remember that, right? That's like Cardano saying, we're going to buy all this Bitcoin. What? Huh, bro? What? Well, it'll protect us. Yeah, it'll protect you. It'll protect you and your investment. It's not going to protect the network of Cardano. Man, you're funny, bro. You are a funny bro, dude. I swear sometimes you're a big jokester. Oh yeah, this one, we've been talking about this for years, right? Me, Matt, Matty, all the people that I've been close with in the space. Bitcoin makes you more financially responsible, right? These are just facts. Here, let's just watch a video. Check one, check two.
an opportunity to Bitcoin, and you know what the return rate on that is. So what it forces you to do is to think about constant trade-offs between your savings and investment and what you're spending money on. And I would argue, if you're thinking about that clearly, it's going to force a level of frugality upon you. In other words, if you think that you can put it, you can either go buy a new car, or you could put the money in a savings account and get 4% fiat, maybe 3%, whatever the rate is. You think, well, maybe the car's not that expensive. But if you think, if I don't buy that car, I can take that money and go buy, I don't know, 25% of a Bitcoin that's going to be worth potentially millions of dollars someday, you're going to think a lot more about buying that car. You're going to say, well, maybe I don't need to spend the money on the car. How do I reduce the... So I think one of the real hidden treasures, if you will, of Bitcoin is it forces all of us to be clear on frugality, or it makes us more frugal. It makes us more conscious of the money we're spending when it's not on Bitcoin. It's a life change.
It's like every purchase is all of a sudden like a 10x more expensive, if you think about that.
Yes. And by the way, remember, again, if your alternative is to leave it in cash and you're not thinking about it, and you don't think of it the way you do when you think, oh my God, I have to, this cost me half a Bitcoin to buy that very expensive, well, we'll do German automobile. Very expensive German automobile cost me half a Bitcoin. Is it worth it? Well, half a Bitcoin, that's really expensive.
It's it will be hard to, this half a Bitcoin will be very hard to work for in 10 years time. Like that's the kind of always how I look at it.
And maybe sooner than that. Maybe sooner than that. Maybe really soon. And think about how interesting that is, because it shows, and I don't know whether you want to go down this path, stop me at any time, but it shows you, Robin, how in effect financially lazy we can become in a fiat system, because we don't value the money until it's really a very large amount. In a world where we do value the money, in a Bitcoin world, where the money has clear, present, tangible value and it's growing, and money becomes, digital capital becomes precious, think how rigorous fit, if you will, it makes us be in terms of how we spend. It's a game.
It is a game changer. But again, we've discussed this time and time again, that soft money creates soft art, soft architecture, soft everything, right? You can just look at art over the last couple hundred years and then go back to the Renaissance, right? Where we have hard money and God, and we have some of the most beautiful buildings ever built, some of the most beautiful art ever built. Well, go look at some of the artists, the Bitcoin artists, and you'll notice some correlations there. Hard money, God, and literally look at some of the drawings and some of the pieces these people are putting out, some of the sculptures, right? Amazing, beautiful, off the charts, precision, like fine art, right? Oh, why is that? Again, because hard money creates hard art. It creates hard architecture. It's going to fix so many things that as human society, we don't even think about, right? No one looks at a gold chart, right, and the dollar chart and sees 1970, right, or 74, when we went off the standard. No one points out that here comes plastic into everything, right? And the cheapness of goods started just doing this throughout the late 70s, into the 80s, into the 90s. It's just over the last maybe 5 or 10 years and shrinkflation, where people have like actually noticed shrinkflation, right? Where they open up this box of, frozen, whether it's, dessert treats or it's XYZ goods, and you normally get 4 and there's 3, right? Or it's your tube of toothpaste that used to be 14 ounces and now it's 12 ounces, right? That will keep continuing to happen if we live on the fiat standard, right? That's what people don't realize. You want to continue to live on the fiat standard, you just keep getting cheap crap. And now that has infected homes, right? If you look at homes built over the last 5 or 10 years, they're not like a home built in the 80s, 70s, or 90s, right? At all. Totally cheap everything. Cheap nails, cheap wood, right? They used to use lots more plywood in the 80s and 90s. Now they use almost everything is wafer board, right? And it does save them money, and it does cut down on costs, but it's not as durable as plywood, which is like, multi-layers of wood together, more strength, right? Wafer board, you can kick a hole through it. Let's be clear. Let's be very clear. If you're using to build like maybe furniture and stuff like that, or you can't see it, sure. You're building walls and stuff. No, we don't want that. And as we go back to a hard money standard, quality will increase, right? The exact same opposite chart will come out over the next 50 years as more and more countries start to realize this trend. And let's get into it, right? I have some interesting charts, and I know we only got a few more minutes because I got to run some errands myself. But let's pull these up real quick because it's really fascinating stuff. So this one is here it is right here. So this is Bitcoin mining by country 2025. Yeah. You notice something? Most of the planet is mining Bitcoin, right? Now, obviously, the hash rates of some of these in the light yellow is very low, but they're putting it up there, right? Greenland, you need a talking to. Africa, come on, you need a talking to. But look, Australia, China, Russia, right? Most of Europe and most of Asia is mining Bitcoin, right? All of North America, is anyone paying attention? All of North America is mining Bitcoin. Who's this down here? Chile, Ecuador. What are you guys smoking down here? Peru? What's going on? Hello, wake up. Yeah. You see the big countries, the guys that have the big economies. There's this Colombia, there's Brazil. Who's this? Venezuela, right? Or no, I'm sorry, that's Argentina, not Venezuela. Argentina. Like, come on. Like, are you not paying attention? Like, these countries are like some of the biggest economies in all of South America. They're mining. Why are you not? I got another article from Cointelegraph. Let's pull that up. This is just from a few weeks ago. Which countries secretly own the most Bitcoin? US. I like seeing that. China, UK, Ukraine, Bhutan, El Salvador. Again, we're in the tipping point of Bitcoin hyper Bitcoinization. I had that backwards. Sorry. We are at the tipping point of hyper Bitcoinization, right? That's where we are. You can't deny it. We're here. And again, all signs. Oh, cool. I actually have to, I can't because I have to go do some important biz in like 5-10 minutes. But I can a little bit. But yeah, like literally everyone thinks Bitcoin comes down like 4 or 5K and the world is the sky is falling. Like, no, you need to be looking at all these other metrics to tell a different tale. Why is Galaxy Digital selling all their Bitcoin? The only theory I've come up with is since and again, that's a taxable event unless they held it for X amount and then it's not short-term gains, short-term capital gains. It's just normal capital gains. So that would probably reduce it by some. The only thing I can think of is that they want to hold a whole bunch of stable coins for some reason, or they're going to take a huge stack and invest it in Ethereum. That's my guess, because they're paying attention. Oh yeah, I said this on a Spaces just the other day. We'll show this one more chart. But yeah, the Ethereum ETF has been picking up over the last like couple of weeks. It's wasn't doing that much revenue. I mean, it was doing revenue, don't get me wrong, people are buying it, but over the last like 3 or 4 weeks, it's been off the charts, literally. Here, I'll pull it up. So as you can see, throughout the course of the year, lots of inflows, some big spikes here, but lots of outflows at the same time. I wouldn't say matching candle for candle, but definitely lots of outflows. It's not until like right around here, the April, where we see lots of inflows and the outflows are almost shut off. And then right around the beginning of June, we see these spikes getting bigger. And then over the last just few weeks, I mean, look at this huge green candle from the 16th. There's a lot of people buying the Ethereum ETF. I have another chart I can share with you from CoinMarketCap. It's a little bit more easy to understand. So just look, I mean, on this day, on July 9th, Bitcoin brought in almost $2 billion in the ETF in one day, by the way. But then look over here where on July 15th, it's almost 50-50 split. $800 million came in for Bitcoin and almost the same amount of Ethereum at 726, almost $727 million into the ETH ETFs. And then on the next day, Ethereum actually, I think it's one of the first times that Ethereum had more revenue come in for the ETH ETFs than Bitcoin did, even though it was only by, what is that? Like $40-50 million, or I'm sorry, $70 million. It's still a lot of money. You can see that the ETF buying pressure for Ethereum has picked up again on this day. It outperformed Bitcoin by over $30 million on this day. Look, positive Ethereum, negative Bitcoin on that day, right? So Ethereum almost $300 million and Bitcoin minus 131 million. And again, on this day, minus 82 million in Bitcoin ETFs, 300 and almost 33 million in Ethereum ETFs, and then boom, the same thing on just the other day. So again, be paying attention. I know, I don't like talking fondly of Ethereum because I have, my own personal bad experiences with it, but you have to follow the metrics, right? That's the one thing. You can hate certain assets, but you have to follow the numbers, right? And the numbers are telling a different story. That's what I think possibly Novogratz is doing. I don't know if they're buying the ETF or if they're going to buy actual Ethereum itself, but it appears they're either liquidating Bitcoin for stable coins or other assets that they want to grow. But at that much, I mean, that was a huge position of Bitcoin. So I don't know. I don't know why they did that. To me, it's insane, especially because all signs point to new all-time high within the next 2 to 4 weeks. Anyway, that's all I got for you today. Thanks for hanging out. As usual, it's a great, fun show. I want to thank my sponsors, Quantum Expeditions, Shieldfolio, Deorganized Media, Bitcoin Live, and all the friends and family have the shows on Bitcoin Lives. Thanks for hanging out. And anyone that was here today, thanks for hanging out with us. And again, as MattySats always says, stay humble, stack sats, hot along. Peace.